This is Mary Ellen McGonagle, and you're watching the MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets. And certainly we are continuing to see quite a bit in the way of action as we've just completed the 6th week of the markets being in an uptrend. And of course, a lot of that has to do with earnings, but let's go ahead and take a look at what we are going to be reviewing today. The first thing, as usual, we're going to take a look at the broader markets. You really want to have a sense of not only where the broader markets are positioned currently, but what type of signals are being provided so that you can formulate your plan, again, not only just for next week, but going forward beyond that. So we're going to take a quick peek at the markets and take a look at some of those indicators so that we can get a sense of where the markets may be heading. Also, we're going to take a look at the recent move into defensive sectors or groups in the broader markets. Last week, a number of defensive groups were the better performers last week, and we're going to uncover precisely why and what you can potentially anticipate from that rotation into these more defensive groups going forward, how you might position some of these within your given portfolios or your holdings. And then also, we're going to take a look at how you can find leadership in this current bullish uptrend in the broader markets. There certainly are areas that have very clearly presented themselves as being in leadership positions. And then beyond that, you're going to want to be able to drill down to individual stocks that might be compelling within these leadership groups. And then also, we're going to take a look at 3, if we have time. I'm going to do 4 companies that are due to report their earnings next week. And these are going to be better known companies within groups that have had a lot of action, a lot of interest within these companies. And as many of you that follow the markets super closely, you may have noticed that earnings have really been quite the driver for a lot of these big outperformers that are have been just really doing quite well. So we're going to take a look at some stocks that could really be quite interesting next week, depending on how the markets behave. So let's go ahead and get started. I'm going to start here with a daily view of the S&P 500 Large Cap Index. So each bar on here is presenting you with 1 day of price activity. And what we want to key in on here are a couple of the overlays that I've put on here. And for those of you that watch regularly, you'll be quite familiar. For those of you not, I'll very quickly review what these lines are that are intersecting with the price action of the S&P 500. This green line is a simple moving average. It's a 10-day simple moving average. Quite simply, it is a smoothed out version of the price over the last 10 days. The red line is a 50-day simple moving average. And then the blue line is a 200-day simple moving average. The significance here is you want to pay attention to the current price action relative to these simple moving averages. And then also critical is the slope of these simple moving averages. So let's go ahead and take a look at where we are currently. We can see that back here at the end of December going into the beginning of January for this year, the index is very nicely broke up above this shorter term 10-day simple moving average, which was one of several bullish signals that we received from my work. I also look at what is called a follow-through day, and this is a system that was developed by Bill O'Neill, the founder of Investors Business Daily, and that follow-through day is a bullish indicator that the downtrend had reversed. So we had 2 significant occurrences that told us it was safe to enter into the markets back here at the very beginning of January. But our first possible area of upside resistance, and by that I mean go back here to November, December, take a look at these rallies right up to that 50-day, and they failed. So this was our first area of concern, potential upside resistance. But the indexes did in fact break very nicely up above that 50-day simple moving average, keeping this uptrend alive. So more recently, what we are looking at is the index really kind of hitting its head, if you will, on this 200-day longer term simple moving average. And realistically, as mentioned in the beginning, we've seen 6 weeks of gain in a row within these broader indexes. So some sort of pause would certainly be anticipated and not entirely out of line. So here we are, the index in essence finding upward resistance at this 200-day simple moving average, pulling back. Now, the uptrend is still in place. It's still in play here, but ideally, in order to remain bullish, we want this index to break up above that 200-day simple moving average. That's a very common tenet of many technical analysts. Break above that would be quite bullish. We can see back here historically we had a very brief break, but it failed very quickly, and that's something that you will see if an uptrend is we see a break up above and it is due to fail. Normally it will do so quite quickly, but for now we are anticipating a breakup above that and a continuation of this near-term uptrend. Now let's go ahead and take a look at some of the other indicators that I have overlaid onto this chart. Actually above, I have what's called the RSI, and that quite simply is a relative strength indicator. And what you want to key in on here is not only this slope, you want that to be in an uptrend, but the actual position. I kind of covered that, but that is a net neutral 50. We want that RSI to be above that 50 in a bullish pattern or position. Unlike taking a look back here, we can see when that brief break above the 200 failed, the RSI very clearly went into a downtrend. So we are currently up here in positive territory, so that's in good standing. Taking a look at the stochastics down below here, another technical indicator that is a momentum indicator. And in similar fashion, we want to pay attention to not only the actual position, but the slope of those stochastics. So up above this 50 is positive. We can see the stochastics breaking up above 50 in line with that break above the 10-day and that follow-through day. Now, currently up above this 80 position, stochastics are in what are called overbought. It's not a problem, if you will. They can remain in overbought for a great length of time. We can go back here to July. There was a whole 1-month period. But what we want to pay attention to are potential shifts. If the stochastics break down below the 80, we also see a break in line with that of the RSI breaking down. But for now, we're up there above 80. We're in good standing here as well. Certainly a break below the 50 would in fact be very negative. So we can see that the S&P 500 is signaling that the current uptrend is still in place, but we want to pay attention to how the action unfolds as it relates to this 200-day simple moving average. A break above that would of course be quite bullish. So let's go ahead. Now we have a standing or a feel for where the broader markets are. Let's go ahead and move on and take a look at some of the other areas as far as how we can see within the S&P 500 where the current strength is. We want to key in on that current strength with an eye toward the strength remaining in the broader markets. So what we have here is, this is another part of the MEM Edge show that I do on a regular basis, where we are looking at what's called candle glance. It's a 2-month view of not only the broader indices, the Dow, the S&P, the NASDAQ and the Russell 2000, but also the S&P ETFs. We want to see within the markets, not only broader market-wise, but being able to drill down within those markets. Where is the strength? Where are the money flows the most prominent, and where are we seeing most upside? Again, with an eye toward a continuation of that. So what we can do here is, with that candle glance, you can access that from the initial interface page on StockCharts.com. And then down here on the bottom is where you would populate not only ticker symbols for individual stocks, but in this case today, broader indices. And then from there, I added what's called the RSI, that relative strength indicator. I want to see where the momentum is, but you can see here you really do have quite a wide array of choices as far as other indicators. The relevance here is you can then sort by that indicator. So after we've added the RSI, I want to see in descending order where, again, that strength is. So up here on the upper left side, this is your strongest sub-industry grouping within the S&P, down here to your weakest, but we'll get down to that in a minute. So this first positive, super positive area, and this has been very constructive for the recent month, is XLRE. This is the real estate index, and more importantly, are REIT stocks, real estate investment trust stocks. This is generally a very defensive area in the markets, and I talked about how we're going to unveil why these defensive areas are really outpacing the broader markets. Take a look at that uptrend, still firmly in place. The next strongest area and subgrouping within the S&P are what's called industrial stocks. XLI is the ticker symbol, and within these industrials, I will tell you, it is primarily due to aerospace defense stocks. These were big winners last year. There's a lot of upside as far as continued spending on defense, not only in the US, but globally. So that's really driving this. If we have time, we'll take a look at how you can uncover within a sector where the strength is. And then utilities. This is the second of these three defensive groupings that are up here in the forefront. So we can see real estate, utilities, and then consumer staples. All three very sound, conservative, more defensive type areas. And many investors that are not drilling down beyond that may think that the markets are in fact rotating into safer havens, but that's not the case. And we will go ahead and, as I move on here, quickly unveil why these more defensive sectors are up here in the forefront after the close of last week's action. And then here we have technology. Technology really came on quite nicely last week. And to see this up in the forefront, technology is comprised primarily of high growth stocks, innovative companies, and the fact that it is up in the forefront is really quite bullish for the prospects of the broader markets. You want to see growth stocks up there leading, unlike some of these more defensive plays here. And then from there, we have the broader indices. Small cap stocks have really been doing quite well year to date. This is another bullish sign for the markets as a move into smaller cap stocks. These are generally riskier, certainly a bit more volatile, and the concept that these stocks can outperform, again, is bullish. Really what it does, the move into these stocks, points out confidence, investor confidence. They're willing to put their money to work in these more volatile, potentially riskier areas. And then we have, of course, the S&P. We just reviewed that. Industrial stocks. This is the Dow Jones, and a lot of this has to do with energy. Energy really year to date has been, it faltered last week, but prior to last week, energy stocks really came on strong, all about the price of oil and so on. But let's go ahead and take a look. Healthcare is faltering just a bit here. This can be viewed as another defensive area, but what I wanted to key in on here is this $ TNX, and that is the yield on the 10-year treasury. And take a look, I'm taking you back here to mid-December. This is a 2-month chart, as I mentioned earlier, and what we can see is the very clear-cut decline in 10-year treasury yields. And so what is happening here is, as these yields decline, investors are seeking other havens for high yield stocks. So we can look at these real estate, utilities, and staples stocks as proxies to the 10-year treasury. So what I wanted to do, as of, for instance, within XLU, utility stocks on average are going to yield 3.3%. That's on average. There are a number of stocks within this area that are yielding quite a bit more. And you will want to marry the individual charts with this view. So let's go ahead and take a minute and view the actual chart. So I'm going to go ahead back because that was the industrials, which look quite constructive as far as the chart, but I really wanted to key in on these utility stocks. And what I did want to point out, this is a daily chart of XLU, and here we are, this is last week's action in the utilities, and you can see this very clear-cut uptrend. I talked earlier about these key simple moving averages, so the XLU is finding support at an upward trending 10-day simple moving average. RSI is up here trending upward nicely above that 50. And then your MACD, not only did we have this black line up through the red, which is a bullish indicator, but really bullish when it moves up above this net neutral 0. So we have 3 signals that are telling us that utility stocks really are looking quite constructive in here. And I talked about the fact that the yield is really quite positive. So what I'm going to do from here is show you, now you have that information, you're informed that the group is looking constructive, it is showing strength. Let's go ahead and see how we can drill down into some of the better looking, if you will, or more technically sound stocks within utilities. So what I'm going to do here from this initial interface page here on StockCharts is go ahead into what's called the sector summary. This is going to present you with a view of the various S&P sectors. Now I'm going to go ahead and chart it, or actually show you the performance week to date, and this is into the close last Friday. And take a look, we can see utilities were up 2%. This is compared to the broader markets that were mostly flat. They only eked out a slight gain. So that's a really strong outperformance. So let's go ahead and drill down, go ahead and click onto the name of that sector fund. And then from here, we are going to get a similar sort. These are the performers, your better performers going into the close last Friday. And realistically, what you can do from here is take a look at any of these various groupings. Now, I am inclined to take a look at electricity utilities. This is not a group that I normally, or an area I normally traffic in. I do focus more on high growth stocks, tech, consumer, and so forth. But within utilities, some of these electric stocks, electric utility stocks, are really doing quite well. They have a couple of characteristics in their favor. Primarily, the price of natural gas has really taken quite a dive. That's beneficial to these electric utilities that use nat gas to convert. So what we want to do once we drill down into a subgrouping within a sector is go ahead and sort it by this SCTR. For those of you not familiar, that is the scooter rating, really powerful ranking. This was developed by John Murphy from StockCharts.com, and it does take into account many different characteristics, but a number of them are technically driven, and it is a longer term indicator, and it points you toward where the strength is super quickly. So this first one, we can see it dropped significantly. It is a Brazilian ADR. That's not going to be very interesting to me, but what I want to do is take a look at this second stock. So what you can do is go ahead and hover over the ticker symbol. It will provide you with a snapshot thumbnail view, and we can see a number of ADRs appear in the forefront. I want to key in for my work to these US, but let's go ahead and take a look at AES, which is presenting itself as highly technically strong. And what we can see here is the clear-cut strength. This stock has been and remains in an uptrend, up above this upward trending 10-day simple moving average. The RSI is above that 70. It's overbought. Not the end of the world. We can go back historically and see that it can retain up there. But really what this is signaling is the fact that at some point in time there's anticipation for, at the very least, a pullback. But certainly as of the close Friday, very clear-cut uptrend that may very well continue. Your MACD is up there in positive territory. We can take a look at one other stock, and then I wanted to spend time looking at some companies that are due to report this week. So back to that scooter rating, and we can again get in front of some of these stronger names. BKH, this is Black Hills Corp. another electric utility stock. And this particular company came out with strong earnings last week, so we can see this gap up. In addition to offering a healthy yield, we can see that the stock also presented strong earnings. And whether it was weather related, Q4 last year was a tough period, certainly with the potential need for increased electric utilities, but also I talked about these higher yielding stocks. And so what we can see is this particular stock is breaking out of a 6-week base. Take a look at that volume on that breakout, and that's indicating institutional support that should continue to propel the stock higher. We can see the RSI trending upward above that net neutral 50, and then your MACD also trending upward above that 0. So we have a number of positive characteristics. Again, I talked about the breakout of that base in addition to your other indicators that are signaling that we could potentially see a continued move into BKH. And so that hopefully, ideally, you can see how you can, once you uncover where the strength is, from there, how you can then uncover potential individual candidates that may serve you well. So let's go ahead and take a look at some companies that are due to report this week. And certainly what we can do is begin by taking a look at NVDA, and this is NVIDIA. It is a very well-known stock within semiconductors, and we can see that the stock has been in a very clear-cut downtrend. This is taking us back to October, and as a matter of fact, from October 1st down to this December 24th trough in the price, this particular drop was a 56% drop in their price. It had everything to do with trade war fears, the actual sense that the need for semiconductor chips had declined in the face of potential reduced global growth. And so a number of factors driving this stock down. So we can see the stock attempted to reverse here with the broader markets into the beginning of this year. But take a look at this drop here. January 28th, management came out and announced that they pre-announced their Q4 earnings, and they said that they would be coming out with lower earnings. So the stock price dropped significantly. And if I didn't mention it, they are due to report on Thursday, February 14th. And so we can see that this stock really is super depressed as far as price. But I will tell you, analysts are coming out and revising their estimates higher for the stock going into earnings. It has everything to do with really just how low the price has gotten. They feel that the stage has been set for the stock to potentially gap up. And as a matter of fact, as far as analysts on Wall Street, 21 have the stock as NVIDIA as a buy, and 9 analysts have it as a hold. Only 1 is suggesting that you sell the stock here. So what I wanted to do is a couple of things. Let's take a look at the stock technically, because we have broken up above that 50-day simple moving average, and this is with an eye toward the stock potentially trading up to this 200-day simple moving average, similar to the broader markets. However, the RSI is rather lackluster. It's just trending in a sideways fashion, hovering about this net neutral 50. So we're not being overly excited by that look. Let's go ahead down and take a look at that MACD, and in similar fashion, it's really just hovering around this net neutral 50. And I will tell you, as a rule of thumb, I do not buy stocks going into earnings. It's just a little too risky or volatile. Although this earnings season, certainly you're being rewarded more handsomely for that. But I will tell you, just given the dynamics here, until I see a more defined uptrend in these other indicators, it would not interest me. I would prefer to wait with an eye toward a gap up and then still having this significant uptrend. And I talked about analysts being positive on the stock. UBS has a $189 price target for the stock. It's trading at about 150 now. The other thing that you can do when you are looking at potential candidates to buy, you want to take a look at other stocks in that group, other prominent names. So AMD is another bellwether stock within semiconductors. This is Advanced Micro Devices. And take a look at this gap up. This is all about their earnings. They came in with nice numbers. However, I will tell you this stock really has not gone on to greater heights with the broader markets. It has pulled back a bit. There is a winning stock that's also in this group, XLNX. With my MEM Edge report, this was on our buy list prior to this big gap up here in earnings. Xilinx was a very big winner, up 18% on this day, up another 6% the following day. And we can see how the stock really is continuing to find support at an upward trending 10-day. Very bullish, but more importantly for your work, you want to see other well-known stocks coming in ahead of estimates and then the markets responding constructively to that as a way to shape your potential decision as far as getting into the stock. Let's take a look at another well-known stock that is due to report next week. Not in that growthier semiconductor, but rather in the farm equipment space. And this is DEERE. A lot of you may be very familiar with this particular company, but DEERE is due to report next Friday. And so what I'm going to do here is take a look at a weekly chart of this. And a lot of times when you use these longer term charts, they can be really ideal as far as potentially giving you a feel for the growth going out longer term. So what I'm pointing out to you here is the fact that DEERE is poised to break out of this very long-term base. It takes us back to the beginning of last year. So it is actually a 13-month base. And when stocks break out of these longer-term bases, the prognosis longer term is positive. So the longer your base, the longer the potential move out of your base. I'm using the annotation ability here on StockCharts.com to highlight what I mean by that base. And when it breaks out above this prior peak, should the stock company come out with strong earnings, that would be quite constructive. Let's go back to this period here. Very, very similar. I'm taking you back to the end of 2016 in a very similar fashion. This was on an earnings release, and we can see the stock did advance beyond that. The RSI is also trending upward above that net neutral 50, as is your MACD. So in addition to using the daily chart, I would tell you you can use the weekly chart equally effectively. I think I have time to review one more stock here that is due to report. It's in a very strong area of the broader markets. Might not be as well known, but the company name is called Shopify, S-H-O-P. It is a computer software. Computer software stocks have been super strong, very powerful area of the broader markets. And what we can see here is Shopify on the weekly has already broken out of this longer term base and is in an uptrend. Analysts like this stock going into earnings. And the company does have, it looks a bit more erratic, certainly on this daily. And this has everything to do certainly with software stocks and the broader markets going into the end of last year. But what we want to key in here more recently is the action. It's up above all of these key simple moving averages and finding support at an upward trending 10-day simple moving average. Very bullish. Your RSI is trending upward above that net neutral, as is your MACD. So the stock is looking bullish going into earnings, although it is currently in a position of hitting a new high in price. So it would in essence be priced for perfection, so that if they do come in with numbers that disappoint, you may see a bit of a pullback. But I will tell you, analysts are revising estimates higher going into earnings, which is a very bullish signal. And I will go ahead and leave it at that for those of you actively trading in the markets. Best of luck this week.